Well, good morning, good afternoon, wherever you are, traders. My name is Thomas T. Ryan. I am the founder and principal trader here at Thomas T. Ryan and Company. We publish a daily email newsletter, which is available free of charge. To come see us at ttryanco.com. Sign up for a 30-day free trial. We take no credit cards for a free trial subscription. After 30 days, it's $50 a month. And what you see up here at the top of this screen is our current results for 2016. As abysmal as they are, it's a difficult year to be sure. But I think what we're going to do today is we're going to take a look at some of the trades that we're currently in. It's been a while since I've put up one of these videos, and we'll go in and take a look at some of our trades, why we're doing what we're doing. The market, as pretty much everybody knows, has been extremely flat and very challenging. Hedge funds everywhere getting killed. I suppose there probably are traders out there that are making money, but it's challenging at best if you're going to be truthful about it. Let's take a look at one of our trades that we're in right now. We're in, I think we're in about 7 open positions right now, all of which except one, I believe, is currently profitable. So the challenge I think that we're having right now is that awful lot of trades. First of all, there's very low liquidity in some places. We've had a number of trades gap past us when we try and do our stop entries. They'll either gap up or gap down, and we'll miss our entry. That's happened 3 or 4 times at least just in the last month and a half or so. And second of all, the market is so flat that there's not a lot of distance in a lot of these trades. So we're getting whipsawed around, and there's not a lot of movement. Although the last few days, obviously, today is the 14th of September, and as you know, we've had a lot of volatility this week, pretty much right after the Labor Day holiday. People came back, all kinds of things going on with Bank of Japan. Oil is all over the place. Gold is all over the place. And so, it's very possible, as we've been thinking for quite some time, this is a market top. This is a major market top, and there's a lot of currents floating around here as the market is trying to figure out what it's doing, whether it's going to go further lower, break trend and grow and go lower, or it's just going to kind of go horizontal and consolidate here for a while, which is what it's mostly been doing. This is one of the trades that we're in right now. This is one of our weekly trades, General Growth Properties, symbol GGP, and we took the position. This is our weekly trade, so we took it on a new weekly low, which was 29.29, which happened right about, I think, right there. Yeah, it's right off of that bar. So we get this thing in here, right there. Yeah. No, it wasn't that bar. Maybe it was this bar. It was somewhere right in the middle here. The reason that we took this is, I'll walk you through this. So here we have double top on the monthly chart, GGP up, down, up, and then a MACD which did not recover with it. Same thing is happening. If you zoom in, you can see it much more closely. This is a classic MACD divergence on a higher time frame. Generally, these are things that I would look for, but this is a counter trend trade. And the only reason that I think we decided to go ahead and do this was because, one, the stock was so far up here. 2, it was clearly a double top situation. 3, very clear, very marked divergence here. So, that divergence is not hard to see. It's right there, and there's the MACD histogram right there popping up, but far below where it needs to be. So histogram's in divergence, MACD itself is in divergence on a higher time frame, and we have a general kind of fundamental environment which is being difficult for a retail REIT, which is what GGP is. All kinds of trouble out there in the retail REIT sector, which has been added to by all of this speculation over the last few weeks really, that we were potentially in a rising interest rate environment. The rising interest rate environment has not happened, but the retail REIT problems have continued. So we're in GGP. We're actually still waiting for 1R, believe it or not. We set the stops on this very wide, so we're going to close in on it here. And my My guess is that we're going to see GGP probably pull all the way back down to this 50 month moving average, which by the time it gets there is going to be probably, right around here, around the same level right here. So hopefully we'll see GGP go down to around 25.65, which will clear 1R for us. We have the stop at break even now in GGP, so worst case scenario, we're just going to break even on it. If you took the trade and you also took it on a more aggressive daily leveraged basis, you had all of this run down here, much of this run anyway, to work with down here. The sell-off volume is continuing fairly well with this, so we're seeing a bit of declining volume as this thing gets down here. But it's only Wednesday of this week, so here's an incomplete week's volume here. It could continue to be this level here, so we're not seeing too much diminishment of the volume. So perhaps this trend is going to continue on down. For it to break below this point might be asking too much, but again, the retail REITs are in a considerable amount of trouble, so we'll see what happens with that. But at the very least, we're going to break even on that one. We'll go look at COG. Cabot Oil and Gas. We are short on this one as well, and I'll walk you through why we are short Cabot Oil and Gas. This is a daily trade, which we just took the other day. We took it on this new low right there, and we are already cleared 1R on COG, I believe, and at break even on that. So, this is similar situation. We have a nice downtrend going on here. Of course, all the oils have been in a downtrend. Oil, of course, I think everybody knows oil is having troubles. So the question is, oil's done a bit of a retrace or a recovery in here. Is that going to continue? Good chance, no, but at least it'll be weak enough. It might continue, but at least there's some weakness. And where's the weakness? Well, the weakness, first of all, is in the downtrend. It's in a downtrend, so good. Here's the rest of the downtrend right here. And the MACD on this weekly trend here is crossed right back here, and it's it's below the signal line here. We see weakness in the RSI. It's overbought. All kinds of symbols. So weakness, trend is ending, downtrend, RSI weakness, MACD weakness, MACD histogram long term, running out of momentum here on this. And then when we get over to the dailies, you see this long term, this is a huge divergence going on here, all the way down here. Now you could say the divergence was resolved right here, and it went back up here, and maybe that divergence is over. I don't think so, because this hasn't changed. This is still going down. So once again, the stock is overbought. We see this turning down, and that's what's leading to this drop off. Will it come back down to maybe the 200-day moving average, the white line right here? Very possible. It's stalling out right now on the 50-day moving average, but we're at break even on this thing, or I think maybe we closed 1R on it as well. So no worries on it. It will be an okay trade at the very least. OKE. Yeah, we did take 1R on that. So OKE is our other one, another oil. This is a daily trade. So essentially we see the same thing going on here, same chart. Oil weakness is returning to oil. You see a kind of a double top or a choppiness happening in here, really a triple top right here. 1, 2, 3 tops right here. Again, and a huge divergence on this one. So we took this right, I think we took it right at right at that low right there. And we are closing in on 1R on OKE. I think we'll probably get 1R today. The market's it's a crummy day today. The market's down a little bit. It was up this morning. Not much going on with volume. You can see this volume is kind of poor. So we'll see. It took a little pop right here, and then it came back. So I think our next move is going to be right about down here somewhere for 1R on that one. So again, to recap, we have a long-term up run here on a downtrend. And this is an interesting pattern to notice as well. I mean, look at this craziness that goes on here. Up, down, up. Very often I think when you see that kind of zigzag pattern in a chart, that's a fundamental change in trend going on there. Undecided change in trend. My guess is you're going to see this thing either flatline or continue on down here like that over the next year. And I think the consensus in general on oil is that the oil is not out of the woods yet. I mean, we're in a massive global oversupply of oil due to a lot of factors, and the oil companies are not going to have it good really for the foreseeable future. So consolidation at best, maybe continued weakness in our favor on the shorts. So that's what we're doing here right now. We're doing better. We're hanging in there. It's definitely a tough year, no question about it. But we're doing the best we can. Love to have you come check us out in a tough year if you want, and love to have your thoughts, and of course, love to have you join us for a free trial.